laugh and hope the next 20 years will bring you a big bag of gold at the end of it. But now looks like for those who are hoping to either enter the investments through art funds or art fund houses, or these individual fund managers who claim to know a lot about art could well have the taxman knocking. As Mohini Varma finds out, the tax surveys are already on and many of the galleries are now being questioned.
Art is painting a strong case for investment, but for high net worth investors and fund houses hoping to make big money, regular brushes with the tax department may well be on the way. Though everyone appreciates art, the market is largely unregulated and lacks transparency. And that's why IT officials will continue to conduct surveys at big art houses for the months to come.
It's got a boom, you've got a bandwagon. This is as dangerous a time as it is good a time. So I think everyone needs to be much more circumspect, and you need to do much more homework.
Sources say art houses are under-invoicing funds and evading tax. And that's along with a widely rising perception that art trading is being used to launder undeclared money. Houses have raised 400 crore rupees in the last 6 months alone. And with the art industry growing at about 40% per annum, this may rise further, which is why many entering the sector want the cracks in the system eliminated. Some of the loopholes in the system include a lack of a formal regulator for the trading of art. And unlike management fees for equity MFs, there are no caps for art fund managers. Plus, close-ended art funds can form a cartel with galleries to artificially increase the prices of paintings.
When the NFO comes in, the mutual fund cannot actually charge more than a certain percentage of management fees. They cannot charge more than a certain entry load, they cannot charge more than a certain exit load. These are called closed-ended or open-ended funds. Similarly, a good regulation in the art fund would actually be much more useful. Unfortunately, without that, there is the option of charging, say, 10% management fee.
From rupees 200 crores 2 years ago, the art industry has grown to about rupees 1,000 crores. Because of this sharp rising growth, and there is fear that the art bubble might just burst in the near future. Therefore, credibility, regulation, and more transparency can only trigger further growth for the industry.
Regulation will definitely help, as art consultants, which are quite absent in the market, people who are buying art, if that increases, the market it'll help the market definitely.
The other roadblock within the industry is the intangible factors for the pricing of art, such as creativity and historical value, and the lack of indices to track price movements. But, loopholes or not, if the likes of Ambanis and the Tatas are dabbling in this fashion, this industry has yet a long way to go. In New Delhi, Mohini Varma for NDTV.
Alright, we'll take a very short break.